The parent company of Sunflower Bank N.A., which is newly based in Dallas, has agreed to a $286 million merger that will more than double its assets and expand its reach into California and the Pacific Northwest. Denver-based First Sun Capital Bancorp announced January 16 it will merge with Seattle-based HomeStreet Incorporated, the holding company for HomeStreet Bank. The deal will see HomeStreet Bank merge into Sunflower Bank, with each continuing to operate under their trade names in their current markets. The companies will combine in an all-stock transaction, with HomeStreet shareholders receiving 0.4345 of a share of First Sun common stock for each share of HomeStreet common stock. The deal represents a value of $14.75 per share, a 37% premium to the January 12 closing price of HomeStreet shares. Following the deal's closing, expected to occur in the middle of 2024, Sunflower Bank will have more than $17 billion in assets and more than $13 billion in deposits. Along with growth for Sunflower, the deal also offers a glimmer of hope that the M&A market for banks will be more active in 2024, following an extraordinarily slow 2023. Sunflower Bank, which had about $7.08 billion in assets at the end of September, relocated its headquarters to Dallas from Denver in November, a spokeswoman said. The move occurred as the bank has grown its presence in Texas in recent years. In 2022, Sunflower bought Austin-based Pioneer Bankshares Incorporated to support its commercial banking efforts. At the time, Sunflower's local loan portfolio in Dallas-Fort Worth had grown to more than $1 billion, and it had brought on more than 50 employees since entering Texas in 2020. As of September 30, Sunflower Bank's assets in Texas had grown to more than $2.06 billion, about a third of the bank's total assets. About 15% of the combined bank's loans and deposits will come from Texas following completion of the merger. Molly Hale Carter, executive chairman of First Sun and Sunflower, said in a statement the merger will enhance the bank's ability to deliver stronger and more sustainable growth with greater earnings power and shareholder value creation. HomeStreet's presence in Southern California, Hawaii, and other markets in the Pacific Northwest is expected to complement First Sun's footprint in the Southwest. Each entity brings a presence in large dynamic markets that are ripe for future organic growth, Carter said. The combination of First Sun and HomeStreet creates a premier mid-cap bank in the nation's best markets and an opportunity to deploy First Sun's proven playbook of commercial and industrial-focused growth. In concert with the merger, First Sun also announced a $175 million infusion of capital led by Boston-based investment giant Wellington Management Company to support the transaction. San Diego-based private equity firm Castle Creek Capital also participated in the capital raise. We are excited to be an anchor investor in the creation of a new $17 billion asset bank serving customers in high-growth markets in the U.S., Nick Adams, a portfolio manager at Wellington, said in a statement. We believe bringing together these companies and combining their management teams will bolster the scale and diversification of their business and create greater value for shareholders. The merger will result in an estimated $55 million in savings for the banks, according to an investor presentation. The transaction also assumes $87 million in one-time costs, including $41 million to be realized at the time of closing. Overall, the banks expect the deal to add 34%, or $1.53 per share, to full-year earnings in 2025. North Texas banks ranked by total assets. View this list.